Hello, everyone. Welcome to the Newsbrowse News broadcast. According to Al Jazeera, India has summoned a senior United States diplomat in New Delhi following a U.S. military strike on a commercial vessel carrying Indian sailors in the Gulf of Oman. The Ministry of Foreign Affairs confirmed that it called in Jason Meeks, the U.S. Embassy's deputy chief of mission, after U.S. forces fired on the Palau flag chemical and oil products tanker, the Setabello. The U.S. Central Command, CENTCOM, claimed that it executed a precision strike on Tuesday evening because the vessel, which was transporting Iranian oil, failed to comply with instructions. The strike resulted in an engine room fire, while 21 Indian seafarers were rescued by the Omani Navy. 3 remain missing. The incident has sparked intense legal and ethical scrutiny over the U.S. naval blockade of Iran, which has also negatively affected Washington's allies. Opponents within India are pressuring the government to take a firmer public stance against Washington. Analysts warn that this development could further strain U.S.-India diplomatic ties, which are already considered to be at their lowest point in several decades. According to Asahi Shimbun, French President Emmanuel Macron announced on June 10 that Ukrainian President Volodymyr Zelenskyy will attend the upcoming Group of 7 G7 summit, which is scheduled to begin on June 15 in Evian, France. President Zelenskyy is expected to participate in the morning session on June 16. Macron emphasized that the G7 needs to coordinate and align its support for Ukraine, pointing out existing differences between Europe and the United States regarding sanctions against Russia. Zelenskyy also confirmed his preparations for a series of key summits, including G7, the European Union, and NATO. Additionally, France plans to invite the leaders of Egypt, Saudi Arabia, Qatar, and the United Arab Emirates to discuss the situation in the Middle East. On the summit's final day, G7 leaders will hold discussions on artificial intelligence with tech executives. According to the French presidency, other major topics of the summit will include global trade imbalances, supply chains for critical minerals, and digital technology. According to GG Press, U.S. coffee chain giant Starbucks is considering the sale of its Japanese operations, a deal that could be valued between 400 billion and 500 billion yen. Bloomberg News reported on June 9 that the potential sale is expected to attract significant market interest, including from rival companies and private equity firms that invest in unlisted businesses. While a final decision has not yet been made, an initial public offering, IPO, is also being considered as one of the strategic options for the coffee giant's Japanese unit. TechCrunch reports that Amazon has secured a massive $17.5 billion loan facility from a syndicate of major financial institutions, including Citigroup, JP Morgan Chase, Wells Fargo, HSBC, and Bank of America. Designed as a delayed draw term loan, this agreement allows Amazon the flexibility to withdraw the funds on its own timeline. This development comes just 2 days after the tech giant initiated a $14 billion Canadian bond sale, bringing its total new financing to approximately $31.5 billion within a single 48-hour window. Although the official purpose of the bank loan is stated as general corporate purposes, industry analysts suggest the aggressive fundraising is aimed at supporting Amazon's staggering capital expenditure on artificial intelligence infrastructure, including specialized chips and data centers. Amazon is not alone in this borrowing spree. Google parent Alphabet and Meta have also recently announced multi-billion-dollar fundraising plans to fuel their own AI expansions. This surge in debt-driven spending highlights the escalating costs of the global AI arms race and leaves investors questioning whether the eventual returns will justify these historic levels of investment. According to CNBC, Oracle reported fiscal fourth quarter earnings and revenue that exceeded Wall Street expectations on Wednesday, while also lifting its full-year profit forecast. Adjusted earnings per share came in at $2.03, beating the consensus estimate of $1.96, and revenue rose 21% year-over-year to $19.08 billion. Cloud infrastructure revenue experienced a massive surge of 93%, reaching $5.8 billion, driven heavily by large-scale artificial intelligence contracts, including over 50% of remaining performance obligations from OpenAI. Despite the strong financial results, Oracle's stock fell 7% in extended trading. Investor concern was triggered by the company's announcement of plans to raise an additional $20 billion through debt and equity financing on top of a previously announced $20 billion share sale, bringing its total planned capital raise to $40 billion. This aggressive funding plan follows a significant capital outlay in fiscal 2026, creating market anxiety over whether the actual demand for AI technology can ultimately justify such massive infrastructure spending. That's all for this video. Thank you for watching. See you in the next video.